Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Monday, May 14th, 2007, and the market's closed. The Nasdaq 100 finished with a loss of 32 cents, or about 0.68%. And you can see on the daily chart there's been zero damage done to the trend here. Just a little bit of consolidation is all it looks like, a little backing and filling in here. No reason to think that this uptrend can't continue higher. We've got rising 10, 20, and 50-day moving average with the market above the 10, 20, and 50, and the 10 above the 20 above the 50. And as I said, they're all advancing, so innocent till proven guilty. Looks like we're kind of trading in a range now, actually, of $46 to about $47 a share on this daily time frame. And it looks like the market's correcting a little bit here more through time than price. And as I had mentioned a couple weeks back, that typically early on in an uptrend we find support near the rising 10-day moving average. Then it's the 20-day moving average that tends to act as support. And that's what it looks like the market's holding above as far as support for right now. So we've got what looks to be support near that rising 10-day moving average down near about 46.20, 46.15. And on this 10-minute time frame, you can see that it's getting a little bit choppy in here lately. And we do have a declining 5-day moving average. So that tells us that it's time to be a little bit more cautious in here. Doesn't mean that we're looking for a big short sale opportunity, not when we've got such a powerful uptrend on the daily time frame. But in here on the 10-minute time frame with a declining 5-day moving average and the fact that the market gapped up, failed to hold on to those gains. It tried to hold support right here at about 46.5 or so, but then did break down. Now it looks like short-term resistance should be found about that 46.50 level, then of course up around 46.90 or so. As far as support goes, again, I think down near 46. So I'm not expecting anything real big for this market, but if it was to break below that 46 level, 46.20 even, 46.10 I guess, is about this level, then maybe we'd see a little bit more of a pullback. I'm just drawing some trend lines in here and just to show you where we're at. It looks more like a time for a little bit of consolidation, but there's no real advantage to being aggressive on the long or short side right now. As far as the S&P 500 goes, looks kind of similar, that we're trading in this range where we'd found support initially at the 10-day moving average. Now it looks like the market's trying to hold above that 20-day moving average. Looking to the 10-minute time frame, we've also got a declining 5-day moving average in here, and the market rallied right up to that level to close today. So that just puts us, I think, short-term a little bit cautious in here, whereas the major trend is still clearly higher. No reason to doubt that this market won't continue to trend higher, but it just needs maybe a little bit of consolidation. The semiconductors, this group, let's just take a look in there. We did have a higher close today. It closed up 10 cents, or about 1/4%. And this market continues to behave very well since the breakout 4 weeks ago. And on the 10-minute time frame, you can see we pushed past Friday's high that initially held as support, shook some people out, but then did close back up above that level as well. I think the better short-term level of support is probably down 37.80. That's also about where the rising 5-day moving average is. So breaking below 37.80, that might give us reason for a little bit of concern. And that, when I say concern, nothing major, just thinking that it might pull back a little bit deeper, perhaps down towards, if it gets below that 37.80, maybe we're going to see a test of 37.40 or so. But clearly still in a very healthy uptrend. And in here you can see it's still a 10-day moving average that's acting as support, as this is a fresher uptrend than the S&P 500 or the Nasdaq 100. The IWM Russell 2000. We've got this market seems to be a little bit more tired than the rest of them. And I say that because we've got the 10-day moving average did cross below the 20-day moving average. And that just kind of occurs a lot of times. It just tells us that basically the market's become more neutral. It's saying the short-term trend is lower while the intermediate term and longer term are still heading higher. So we still give the benefit of the doubt to the buyers, but it looks like this market might be in for more consolidation in this area, and I think that the important level of support continues to be down at about 81 even, and then about 83 and 83.25 or so, 83.20 as far as upside resistance goes. As for the stocks that we had mentioned over the weekend, they were all losers. ADTN did get pushed past 26.22, and we were stopped out as it dropped down to 25.82. And I think we actually nailed the low in there today. And that just happens sometimes. There's no avoiding it. Also got long OSIP after the pullback to 36.60, and then by the strength at 36.75. And then we were stopped out of that one with a 40-cent loss. Microchip, MCHP, another loss in here as this stock did move past 40.95, and then it turned into a complete dud. Broke below our stop at 40.52, and did continue lower. So good thing for the stop. Cypress CY, bought this one 21.65, and we're stopped out 21.45. So 20-cent loss in there. So it was a good thing because it kept going another 25 cents lower.